Well, I am Steve Savant, your host for the Quest for Financial Freedom, brought to you by Brokers Alliance. Need financial guidance? Call Brokers Alliance. I want to welcome everyone listening on the Family Values Radio Network and over the World Wide Web on YouTube, Ustream, Vimeo, Facebook, LinkedIn, Twitter, and the Insurance Forum where I blog myself to death. And you can contact us on our email address, thequest@brokersalliance.com, or call us toll free, 1-800-290-7226. It's not what I know, it's who I know, and that's why my special guest on the Quest, turning out to be a co-host actually, is Eric Palmer. How you doing, Eric?
Thanks for having me again.
Again, well, it's all insurance month here at the Quest. We're just talking about everything that is insurance. But actually, this week we're talking about the love product. You know, all this, our tribute to Valentine's Day. If you missed Monday's show, you should really go back into the archives. You can pick it up on Vimeo or YouTube, or hop out to our site, whatever. It's just, you really need to see it. It was really good. Carla and Jensen did a great job with the MSI. And really, I can do all the math I want, but if there's no love, take care of the family or whatever. I mean, what can I say? It's really not economics. It's a love sale. We talked about yesterday, Eric, we were on this. We just started getting into the different types of insurance. We talked about the front end baby steps into the product called term insurance. Term insurance is for a term certain. It's not for the life of the client. It's generally for a term certain. I like the acronym TERM, Temporary Expense Reimbursement Money. It's temporary expense reimbursement money. So I have needs, but sometimes my needs are not temporary. Sometimes my needs are permanent. And so if I'm going from term to perm, I must have permanent expense reimbursement. I'm going to have liabilities, economic exposure from now forever. I'll never get out of it in my life. So that's why we look at permanent. And there are so many types of permanent. I mean, we're looking at guaranteed guaranteed universal life, assumption universal life, indexed universal life, whole life. Oh my gosh. I mean, it's just, we're getting into it. Let's talk a little bit about permanent products. And let's just start off with probably, we'll save a little bit of the whole life. But I want to talk about what type should I be using, because once I'm in permanent land, they're all going to go, well, like you were saying, I think yesterday you said some of these contracts go all the way out to age 121.
Right.
Right. I'm sorry, but let's just stop there for a second. The maturity, this is the maturity date of the contracts. There are certain permanent contracts out on the street now that issue to age 90.
Right.
There are a couple second to dies that I saw out on our market and our big inventory that go to age 94. That's not the maturity date. That's the issue date.
Right.
Eric, I'm sorry. That just seems so long.
Well, you said it yourself, I think, 3 weeks ago in one of the episodes, how many individuals are centurions, how many individuals are living past age 100. So, insurance companies now have just developed a pricing model to determine premiums and coverage to age 121. I think they're getting a jump on us a little bit, but a contract to age 121, you have the peace of mind to know that you most likely are not going to outlive the policy that you've purchased, and I think that's the key point there, is not outliving it. We talked about, especially on Monday, we talked about the life insurance being more of a love sale, an emotional sale for the family. It's not just covering the costs and the bills and those types of things, but it's also creating legacy for your family, more opportunity for your children. And you don't want that,
grandchildren,
and your grandchildren, and you don't want, in some cases, to run the risk of that term ending. You want to make sure that you've got that coverage all the way through your lifetime. And as we've talked about before, the advancements in medicine, people are living longer, and we don't want to necessarily risk running out of insurance.
Yeah, if you still are 2 to 3 days past Valentine's Day and you forgot to get something for your loved one, why don't you go ahead and make a copy of your life insurance premium check and insert it into your belated Valentine's? Maybe that will cover a multitude of sin.
Right.
Okay. Well, I'm looking at these ideas of going, the farther out, Eric, we go to 120. I mean, I saw a carrier that actually illustrates to 130.
Right.
I mean, that sounds like Star Trekian life expectancy.
Right.
I mean, that's really live long and prosper. I mean, come on.
Right.
So when I'm looking, I noticed the premium goes down, though. As we've been stretching the timeline, the premiums now are getting smaller, really affordable.
Absolutely, and the premiums in some cases, depending on how old you are so close to a term insurance premium that you really want to evaluate both and determine, what is best for me here. Do I need permanent insurance, because 15, 20 years might not cut it?
Well, your team does that, though.
We do. We actually will, every time you make a term insurance request, we'll ask, is there an opportunity here for some permanent insurance? Let us show you how much this is going to cost. I'll give you an example. I ran some numbers on a 70-year-old, and I think I was looking at a $100,000 policy on a preferred non-tobacco, but 70 years old, a male, could purchase a 20-year term insurance policy, one of the cheapest premiums out there, about $2,400 a year. Okay.
And that was for how long?
That was for 20 years of level term insurance with $100,000 of tax-free coverage on the death benefit. You can buy what we call a guaranteed universal life, meaning that insurance that's guaranteed coverage to age 121 for just $26.96 a year of premium. So literally a $296 increase in premium, but your coverage doesn't end. It's all the way to 121 instead of just the 20-year.
Well, for that little bit more, why would you not lock it down?
That's exactly it. And I think it's because sometimes we find that we're just not asking the additional questions. Should we look at permanent insurance? Should we look at those premiums? Absolutely, and that's what our team does. We'll analyze both sides of it, give you both numbers, and say, look, we're leaning on the permanent because I think this is a good idea. You have to remember that for every year you live, your premium costs are increasing if you haven't bought the policy yet, right? So if I buy 20 years of term and I convert it in 10 years from now, like we talked about in the episode before, or maybe I haven't bought the policy yet, I'm just waiting and waiting and waiting, it's just getting more expensive and more expensive. So if you can lock in some permanent insurance and pay that same level premium for the next 30, 35 years, guaranteed, that's probably the best investment you can make for yourself.
Well, when I'm thinking about permanent insurance and trying to lock down, you will be able to, I mean, I've seen this because Brokers Alliance carries a huge inventory, one of the largest in the United States, of different life insurance carriers. And if I'm looking, and you guys do this on a regular basis, you do quotes that go 10, 15, 20, 30, and then permanent.
Right.
And so you can measure the very thing you said. Now, I just want to make sure I got this right. When you're looking at a 20-year level term, and what was the age on this gentleman?
70 years old.
70 years old, and it's $2,400 bucks?
Right.
I mean, and then you're talking for just $26.96? See, to me, that's just bizarre.
It's too close.
It's
almost
too close. Why make why wouldn't you pay a little bit more?
And what they're looking at is if you're 70 years old, your life expectancy is in the late 80s. Okay, so either permanent or term insurance, they already know that the general life expectancy is about the late 80s. So they're, the insurance companies starting to find a little bit of closure at that point in comparison to the term insurance and universal life, because they're betting that you're going to fall within that general parameter of life expectancy.
Well, I remember we were looking at yesterday's term contracts. We were talking about some of these unbelievable numbers, especially for young people today.
Right.
And Eric, when I think about it, the odds are so heavy that your generation, your wife, and did you take care of your wife on Valentine's Day?
Oh yeah.
I just want to make sure we're 2 or 3 days out.
I'm still here, right?
Yeah, you're still alive. It's still not too late to drop a card, and I say put a photograph of your life insurance check in the card. That will probably cover your mistake of being late. But you might want to throw a few roses in there too.
Right, maybe.
But my thought is when you're looking at the differences in premium between, because I've always been under the school of, well, term's the cheapest. I've taught at the CPA Society here in our state. I just had an article a couple months ago appear in their newsletter, and all the CPAs I know, and there's thousands of them in our state, all are looking at buy term, invest the difference. But when you say for another $296, I don't know why I would not be putting this on permanent and keep it there.
And the older you get, that's when that really starts to make sense. The older the age, we see the term insurance and the permanent insurance premiums getting closer together. Now, that same example, a $100,000 policy on a 50-year-old male, we're seeing about a 2-to-1 ratio. So you see about twice the premium on a permanent policy than you would on a term policy. So, for example, 20 years of term on a male would be about $300 a year for $100,000 of coverage, and then if you look at a permanent policy, you're a little bit more, about $857. So a little more than double actually in terms of the total premium. But the older you get, those premiums come closer and closer together.
They start to merge a bit.
Exactly.
And see, I would have thought I would have been opposite.
Right.
Yeah.
Right.
Counterintuitive. When I'm looking at the issue of permanent, I have guarantees, but sometimes people say, I don't know if I want to lock that in. Why would a person use a current assumption UL, which is not guaranteed? It may have some guarantee. I shouldn't say it doesn't, but
some current assumption products, they do have guarantees. Guaranteed to age 90 is kind of a common one that we see, or at least 20 years of guarantee that it's built into the contract. But the reason we look at current assumption permanent insurance is because it has an extra feature that comes into play here. It's called the cash surrender value. And a current assumption policy is allowing us to get a little bit better rate of return, the interest rate that this policy is earning for us, and it builds up a cash surrender value. And that cash value is very important. It's not just a pool of money that you see on your statement. It's something that you actually have access to via loans or withdrawals. If there's a hardship, you need $10,000 and it's in your policy, you can loan yourself that $10,000 out of your cash value.
And you get more access to a cash product on a current assumption UL versus a guaranteed universal life.
The guaranteed universal life, the age 121 contracts, usually we see little to no cash value, and that's because we're paying the bare bones, the cheapest premium we can to sustain the guarantee of death benefit to our beneficiary. The current assumption is a little different. We're paying a little bit more premium, and we're getting a little bit better rate of return in exchange for some additional benefits that the life insurance. It's not just when you die you have a death benefit. You possibly have a pool of money to work with while you're alive.
I know we're going to be talking about this tomorrow about indexed, but here you are. You have a permanent contract using indexing. It could be S&P index. You could be the Russell 2000. It could be global, foreign. I mean,
and that's one of my favorite products right now as far as what's available to us in the industry, because you have all this upside potential.
Well, in our next segment, we're going to be talking about perhaps the most persecuted product of all time, the original permanent policy that really is starting to make a comeback because of the interest rate, and that's whole life. So coming up in our next segment, we're going to be talking about whole life, the most persecuted product. You're listening to The Quest for Financial Freedom. I'm Steve Savant with more after the break.
Economists call the first 10 years of the new century the lost decade, where most Americans experienced a level of unprecedented financial loss. But some savers and investors found one sector of products that actually made them money. Products that were guaranteed, tax-advantaged, and backed by some of the biggest names in the business. Now, focus on the returns on your money without worrying about the return of your money. For over 30 years, Brokers Alliance has maintained one of the largest inventories of guaranteed and tax-advantaged products in the country and serves a nationwide network of financial professionals